Good afternoon. Today is Monday, and we're supposed to have live trading at nine tonight. But instead, I kind of decide that since we have twice a week, Monday is live trading. Actually, it's actually the weekly market outlook, and Wednesday is the one that I provide continuous training for those who are in the trading room, right? So for Monday, it's actually for all OFT students, but I've been doing that for I think for quite some times already. And those of you who need my support, I think you have already joined the trading room, and those who are not in the trading room, I guess they have to study on their own. Anyway, I provide all the workshop video recording in the Moodle, right? They can always go there and watch. And I don't think I want to continue to provide Monday live trading. I mean, I can provide a recording like today, these sessions, and just to share with you the market outlook, what are the opportunity I'm looking at. And come Wednesday, we will have our regular training, online training. All right. Now, without further delay, let's go into some of the pair. Now, before I start these sessions, I saw the Leonard have posted a goal, which I like to share with you guys as well. I think Leonard have show he has understand this concept well. Congratulations, Leonard. Now, basically, we can see that we are in the uptrend, and this is actually a pullback, right? And now we can see the price actually go consolidate, and it's more like we see a stop hunting, okay, and the price is coming back down. Okay, that's what I see. Okay, potential stop hunting. Okay, so this is a daily time frame. Now, of course, we can use based on higher time frame daily, or based on 4 hourly or 8 hours, up to you, right? You make the decision what time frame is your higher time frame. Okay. So if I see that 4 hourly doesn't give me a very clean price structure I like to see, I might just switch to maybe 8 hours. All right. So now, first of all, we want to define our market, the structure, right? Are we in a bullish trend? Where are all the validated high and low? Okay. So basically, I've already do this pair for Leonard. And you can see that I start from the low here. This is January this year, right? So if you are intraday trader, I don't have to go all the way to here, this January lay, because the current price is here. What I'm more concerned is the current price action, and not something that is back in January, which is so far away, right? Price might eventually come to this level, is 1780 eventually, but definitely not today, definitely not this week, all right? Unless we really have some kind of event that push the gold price lower, which I don't think so, right? So, but nevertheless, we will need the even though we don't look at this point, but sometimes we need the structure point, the low, to show us what is the market bias, right? So you can see that we have low, we have a high, we have a retracement. Okay, this retracement back to about this swing about 50%, I think. From this low to this high, okay, it's about 50%, right? So we consider that is a valid pullback. Now, if the pullback is only at 23% or less than 50%, we disregard those pullback, because those shadow pullback is unlikely to be a pullback. In future, it could be a liquidity trap. All right. Now, it could be a low or high that provide liquidity for market to take, right? I will explain that later. Okay, so now we have a high, the price pullback, we make a higher low. Now, how can we know this is a higher low? Now, before the price take out this high, okay, before the price took out that high, how come like that? Before the price took out this high and make a higher high, this is not yet a higher low. But once the price make a higher high, right? It took out this high. This low is now validated. So we say that this is a higher low, price make a higher high, and now price pullback. Now you can see that this pullback again is all the way back to this low, more than 50% of this entire retracement, right? You can see that it's more than 50%. So we can then consider that this is a confirmed higher high. The price come back down here, right? So this is what is a trend in a higher time frame, bullish, right? So if the trend is bullish, definitely I want to look for some trade, right? Some long trade. But now what about here? You can see that this is referring to a lower time frame trend, right? Because right now we can see that the highest high is this point, the lowest point is this, right? So long as this high, so long as the price did not trade below this low, we are in an uptrend. All right, so now we go down to the lower time frame, 4 hourly, okay, or you might go straight to 1 hour, up to you, right? You can just decide your now you can see 1 hour is kind of big, right? So let's 3 hours. Okay, because now I want to focus. I already know that we are bullish based on these two swing. Now I'm paying attention to the price action within these two swing, right? You can see that we were bearish before, and now we sideways, and now it looks like we are uptrend. Now, how can know we are uptrend? You can see that price make a lowest low is here. This is the lower high that caused this lower low, which now it has taken out by this high, right? So we have a low, we have a high, we have a pullback to more than 50%. This is a higher low. Then we have a break of this high, make a higher high. So now what do we have? We have this PAP logo, right? So once we have this PAP logo, all right, we can say that, well, we are in an uptrend, right? We are in uptrend. We have this 4 point, right? Why? Because we have break this high to make a higher high, all right? And now once the price make a higher high, what is the next likely price movement we can expect? We can expect the price to pull back, right? Now, if this trend is continue to be a bullish, I don't expect this price to pull back and take out this low. It will likely to trade within this range. So this, I define my range. Now I know that this is the range I want to trade, right? So I think it's quite straightforward, right? If you keep doing it, then you understand that it is not that difficult to look for opportunity. It's actually everywhere, right? So now we are going out to a lower time frame. I can see that we are in the lower time frame, bullish trend. Higher time frame, bullish trend. So now this is the best scenario where the lower time frame and the higher time frame are in sync, right? We want to trade in the direction of the bullish trend, and lower time frame also show us that it is bullish because the last structure has already been taken out, right? This is taken out. Okay, so now let's go to the maybe 2 hours. 2 hours looks even better, right? So now we can see that this is the range that we are going to trade. So if I make it different color, the blue circle is the range that I want to trade. Okay. So once I define my range, I have my buyers, I have my range. Now I define my AOI. Now, where is my AOI? Well, before we define the AOI, you can see that I have drawn some trend line, right? Below the trend line are all the stop loss. Below this triple low are all the stop loss. This is stop loss. You can see how the price came down and grabbed all the stop loss. So I know that if I want to take about a long trade, if this is the range that I want to take, right, these two blue circle, now I want to trade below 50% of this range. So I pull a fib. 50% of this range is, yeah, we are now at the moment below 50%. So I can start looking for a long trade. You can see the price came down, took out this, right? And now we are at this demand. This demand. Okay. So we have a potential demand, another demand which is here, another final demand which is here, right? But this is a different range. This range is considered only when this low is being taken out. But right now we are only working with this range, right? Unless price come down all the way and take out this low, then we are working on this last demand. But right now we are working on this, right? So these are the two AOI I'm looking at, which I think Leonard had accurately pinpointed the two level, which I'm Very happy for him. Okay, so now let's remove this Fibonacci because we don't use Fibonacci. We just use as to tell us whether location high or low. But basically, we know that now we enter our first AOI. So what do? Well, I flip to the lower time frame. Okay, say 5 minutes time frame. Okay, not necessarily it must be 5 minutes time frame, right? You must go to the time frame where you see the price action make sense to you, right? So again, once again, right? I'm looking to go long on this AOI, but do I see? I want to go long in this 1 hour. This is 1 hour, right? Right. This is my 1 hour AOI or 2 hour AOI. I want to go long, but the highest probability is when the lower time frame and the higher time frame are in sync. Now you can see right now, this basically is downtrend, right? So lower time frame is downtrend, higher time frame is bullish. So this is not the time for me to buy. So in order for me to buy, I need to go down to a lower time frame and see whether the lower time frame has flipped, right? So I go down to 10 minutes time frame. 10 minutes time frame, I see there's good, the price stuck in the range. I might go down to 5 minutes time frame. Okay. So in 5 minutes time frame, right? I'm not going to 1 minute or 3 minutes time frame yet for entry because it is still in a downtrend, right? I will only go, you can see right now, this is basically in the downtrend. Price continue to take out this high, this low, right? So now this is what we see. Now we start to see the price potentially make a higher low, right? Now, if the price took out this high, okay, this is the last high. Okay, sorry, this is not the, this is the low here. This is the low, the lowest low among this swing. The point, this is the high that caused this low, right? So we need this to be taken out. We need this high, lower high to be taken out, right? So this, before we start to go into the final step, which is the double CE, double confirmation, right? So I need to see this go up here, okay? So basically, if I just remove this for the time being, now this is a high, lower high that caused this lower low. So now it pull back, make a potential lower high. Now this is a potential higher low. We don't know yet, right? So basically what we need to see, oh, now price looks at price coming down again, right? So that's why I say we can't confirm, oh, it's going down. Now it's going down, right? So what we are waiting for is this need to make a higher low, then the price make a high like this, right? You can see the PAP logo come out again. So this tells us that in a 5 minutes time frame, we are in the bullish trend, which is in line with a higher time frame trend. That's where we start to wait for a pullback to enter, right? So once again, you can see that the break structure, break strategy just explained to you in a very easy manner, right? Not difficult at all. All you need to do is just continue practice, all right? So gold is one of them, right? I'm looking for these two POI. I'm not sure whether it will happen. If we don't see the price market structure change, basically, if this we don't see the change over here, we need to see then basically this AOI invalidated, right? Then we have to look for the next AOI. Now, if this low is being taken out, then we look for next AOI, which is here, right? Which means that we are now working on this swing. Okay, and this is a break, make a higher high, right? This looks like it's the internal liquidity. That's why this become not that strong, right? Can you see? This is the low, right? And the price make a high, it pull back, make a higher high. So in this case, this looks like internal liquidity. This is external liquidity, right? This is external liquidity. So this internal liquidity could be weak and not able to hold. Then we look for this external liquidity for a potential long trade here. Okay, so that's gold. Next pair I want to talk about is euro dollar. Let's take a look at euro dollar. Right, go to H4. Okay, that's what I see on euro dollar, right? We are in a downtrend. Okay, last week we can see that we have this PAP logo again. We are in an uptrend. In a higher time frame, we are bearish. You can see that if we go do the hourly trend time frame, we are bearish, right? We are bearish because we have a high. We took out this low, then make a lower low. Okay, so we are bearish in a higher time frame. But in the lower time frame, we could be bullish, right? Because after this long uptrend, long downtrend, okay, this is a expansion leg. Now we can basically expect a retracement leg. Okay, so it's something like we are now expansion leg. Now we see the price doing retracement leg. Something like that, right? So this is high, low, high, low. So now what we see here is a retracement leg. So we might see the price retrace all at least to 50% of this entire swing before we can start to see the price go down, right? So for the time being, we might able to look for some potential long trade and then take it up to here before we start looking to sell. All right. So now we have this. This is bearish. Okay. If you look at this high and this low, we have took out this low. Okay. Now, this is not a lower low yet until we see a proper retracement until at least 50%, but which we don't have yet, right? So now the price is actually in the range in the lower time frame. So let's go down to the 4 hourly. So what we see in the 4 hourly, right? If you daily time frame we don't see much, then we go down to 4 hour. Now in 4 hour we have a low here, price rally up, right? We can see that we have a low, price rally up to this high, and then you retrace down all the way to make a low here. So now, and then after that, the price break this high, make a higher high. So this is a higher low, okay? And this is the higher high. So immediately we can see that we have a PAP logo appear again. So in this lower time frame, we can say that we are bullish, right? So as an intraday trader, we can trade this. We can look for potential for long trade, right? Until 50% of this entire range. We are looking for this. This is a dark expansion leg. This is a retracement leg, right? So we can start looking for a sell when the price reach 50% and above, which right now the price is clearly below 50%, right? So we can look for potential long, and once the price above 50%, we can start looking for short in line with the higher time frame trend, right? So now let's take a look at this lower time frame bullish trend. Now, if this is bullish, let's go to the 1 hour. Now, where do I want to? We're looking for long, right? Now we have defined our AOI. So first of all, this is my range, right? So this is the range I'm working on. So let's put it red color. Right. So this is the range. Okay. Clearly, the current price is below 50% of this this range, right? So we can look for potential long, right? So where is our AOI? You can see that this is a trap order. This is this long wick, right? Institutions sell and then it bring the price up higher. So this is the one. If we go down to lower time frame, like 45 minutes or even 15 minutes, we were able to see the institution actually push lower. Now look at this. See, it pushed lower, it took out all this stop loss below this swing low, and then it clicked higher, break the high, and continue go higher. So this is a trap order. This is a trap order. So we are looking at this trap order. Okay. Okay. So now we go to the left, right. So it has already taken out this trap order. Okay, fair enough. Then we look for the next one. Next one, this is the 50 minutes time frame. Let's go to 1 hour. Okay, so the next one is this, right? So just now we said that we are working on that range. Now 4 hour first. Where is my higher low? Just now we say that this is the low, this is the high, this is a higher low, this is a higher high. Okay, so this has been taken out. So the next level that we can work on is this, right? This whole entire range. Look at this big ERC down, and then it break this high, and price right now come. Of course, this is very wide, right? So we're going to narrow down to a smaller range, smaller demand. So go down to 1 hour over here. Oh, these are all very bearish candle. Look at all these candle, boom, boom, boom down, right? All very, very bearish candle. Okay, so the low. Well, we can leave it as it is, but it's a very wide range. Okay, it is a very wide range, but it is all we can reduce to the last bearish candle, which doesn't, to me, it's not really make sense, but we can just put it as all the bearish candle, right? Because we are not going to enter here unless we see a change of behavior, right? Now we can see that we are now in an AOI for potential long, but in a lower time frame, you can see that we have a high, low, lower high, lower low. So we are in a bearish trend, right? In the lower time frame, this is the bearish trend. So we need to see a break of structure. You can see the price push up higher. Okay, this is the high that make this low. Now this high is taken out by this high, and the price pull back, retrace back, and now price, did the price take out? Yes, it took out, right? So now you can see that we have a PAP logo. Okay, not very nice, like almost like the square, but it's still a PAP logo, right? So let's go down to 5 minutes, something like that. Okay, so we see that we have a bullish trend over here in the 5 minutes time frame, and we are in the AOI. Now, can we look for potential long now? Yes, we can. Right now, we can look for price to retrace lower. See 1 minute time frame. In the 1 minute time frame, let me remove this. Now, where do I want to go long? Now I'm looking at this. I'm waiting for confirmation and triggering, right? Within this swing, where am I going to go long, right? So within this swing, I can see that there's some gap here that need to be filled. Okay, this is about 50%. So this is a potential AOI. You can enter. We have a big gap here, right? You can see this big gap here. Okay, we have this trap order here. Look at it, bearish candle, down, sell, and then it went up. It took out this high, right? So, and I mentioned, right, the highest odd to put in a trade is the origin of the move. Now, where is the origin of this move? Where is the origin of that move? Now, we can have a lot of AOI here, but the highest odd AOI, right, that it will be the origin of this entire move. So the origin of this entire move is this. Okay, so now I can basically put in an order, put in my buy limit here. Stop loss below this low, target upwards. How to measure our target? Go to the higher time frame, like 1 hour or 30 minutes, right? Now we can see that this gap should be easily get filled. So our target should be at least to here, right? To this level, at least. Get it filled, right? This the gap. Yeah. So this can be our potential order trade there. Okay. So that's the euro dollar potential. Now, one more trade is the pound dollar. Let's take a look at the pound dollar. Now, what do we see on the pound dollar? On the 8 hours, you can see that on the higher time frame, we are bearish. right? In the daily time frame, we are bearish. We have this break here, make a lower low, but now you look at this swing, this whole entire swing, bigger time frame swing. Look at the red color swing, right? This is the higher time frame swing, okay? That break this low, that make a potential lower low. So now I'm expecting after this expansion move, I'm expecting the price to do a rebalancing. You can see that ERC, the price is doing the rebalancing, right? So at least to 50%, maybe to this breaker before the price continue to go lower. All right, so that's what I can see from a higher time frame. So when I go down the lower time frame, the H4, I can see that we are bullish here, right? We are bullish. And now you go to H2. H2 is better, right? Or even H1. Let's take a look at H1. H1 looks very ugly. H3. H3 also looks okay, 2 or 3, yeah. Anyway, we see the price is give us the PAP logo, right? Which tell us that this lower time frame, right? We are bullish, okay. And we already expect this to move higher because of the to do the rebalancing, right? So in a very short time frame, we can potentially look for long, right? So this is the range that this is the low. We have a low here. Price took out this high. Make a higher high. Price retrace back down. Price take out this high again, make another higher high. Price retrace down, right? So basically we have this zigzag. Now I'm going to work on this the first range, which is from this. Oh, why no, use the green. Use black. All right, the black circle. The black circle is the range that I'm working on for intraday range, right? So I can see that this is the origin of this entire move that took out this high, they make a higher high, and now the price is actually retraced down all the way to the origin of this entire move, which means that this is a very high odds area to look for a long trade, right? So now I go down to lower time frame. The last push down, right, has been taken out by this high. Even if we take this, it's a lot. This I'm looking at this. The last push down to make this low has taken out by this high, and then after taken out by this high, the price retraces down. So we have up, down. So what do we need to have next? We need to have another up move to complete the PAP logo to take out this high. Now, once we have that, it means that the 5 minutes time frame is now in an uptrend. We can start to look for a long trade on the pullback. Okay, so now we have not yet see the uptrend in this 5 minutes time frame. So we wait. We need to have this high being taken out. Okay, so I was looking at this high. Now, even if you take this high that caused this low, this high is also taken out by this, right? So basically, I need this now. This is the key for double confirmation entry. I need this to be taken out before I start to look for a long trade. Okay, I think that's it for this recording, right? And I'll do some do the compressing. Hopefully, I can upload it before so that all of you can see. And tonight there will not be any live trading, right? You can just take this as a replacement. See you on Wednesday.